Welcome to Born to be Scaled, the show about building businesses that are designed to grow. I'm John Friedman, together with my co-host Sam Morehouse, and supported by Barry Cranford and his team. We speak with founders, builders, and investors about what it really takes to scale a company. Sam and I started our careers together on the grad program at Morgan Stanley, and after 20 years in finance technology, now both run our own businesses. In each episode, we unpack the real lessons behind scaling companies. Welcome to today's Born to be Scaled session. Thanks for making the time. This is a very open conversation between myself and Sam, the co-hosts, and our guests. Today, that's Adam and Yunus from Almond Fintech. What we will do is run through some talking points that we've prepared in advance, but it's not a scripted conversation. With that, I will again welcome Adam and Yunus. Thank you for coming, and we'll start with the easy bit. Can you tell us what is Almond? What did you start doing, and are you still doing that 6 years later?
Sure, yeah, I'll jump in here. So we're absolutely doing it right now, 6 years later. And what it is a technology services company in the financial industry that makes global money movement more efficient. Basically, we saw that the financial system today is fragmented, accessing liquidity, routes, timing for the movement of money from one country to another is incredibly inefficient and costly. And so we set out to build technology that could intelligently route money globally through the best possible path, with the end state of providing a more equitable, accessible, affordable solution to people everywhere, whether it's for the purpose of remittances, B2B payments, corporate treasury, you name it. Come a long way, built something pretty impressive, and happy to share more about it.
Thank you very much. I remarked when we were chatting on our prep call that all of us, big or small, probably have some sort of utility with what you guys offer. So my business partner's in Germany. We send pounds into euros from the UK to Germany. Sam's been running this Ghanaian software company, Turntable, for a while. Money coming in probably in several currencies, needing to make its way to Ghana. So if we dig into a little bit about starting this, when did it stop being an idea and start being real, a job, a vocation, a whole movement for you, and committing to that startup life? What convinced you that you could build a company around it?
Actually, it really went from a problem that I identified and felt, and then that evolved into a commitment to solving the problem. And then from there, a lot of ideas arose as to how to solve it. And the current one was really just many iterations down the road of these long list of ideas that I had. And the one that we landed on, or that ended up landing on, was one that was developed with Yunus. But basically, I spent a lot of time working in various industries before I really began to understand that individual financial stability and economic mobility were at the heart of sustainably overcoming a lot of challenges impacting quality of life. So I didn't know anything about fintech at the time. And so I looked for the best possible ecosystem in which to build a technology that helps achieve this. I went back to school where I met Yunus at MIT, and then a real material idea around the solution started to evolve, and then we started building it. Now, the road is still very windy thereafter, of course, but it was, I think it's always been a commitment to solving the same problem, that same North Star that allowed us to move through this very windy path, quickly pivot frequently, but still moving towards the same objective.
Can you tell us a little bit about why the problem that you're solving is still a problem? You mentioned remittances, you mentioned international businesses that need to move money from one place to another. Very kindly pointed out that we're both in the space and suffer for those problems. It seems like part of the business is settlement arbitrage. In the UK, from one account to another, 4 seconds settlement. As many of our listeners know, I just moved back from the States in September, where the world is very, very different. Why is it still such a huge problem?
Yeah, so this is an interesting field where there really hasn't been much innovation in the near past, whereas the problem has existed since the invention of money, right? Since there was money, people had to move money, transfer money, and convert between different currencies. The system only got more fragmented with the addition of more middlemen over time. And finally, the innovation that we are seeing at any reasonable scale is the introduction of stable tokens, which are being used to move money. But until then, and even we can talk about that in a moment, but it still requires a lot of people to get the money across where it needs to go, right? There are regulatory checks, there are compliance checks, and getting money from one country to another is only part of the puzzle because the last mile delivery is still very cumbersome. So that's why I think this is still a problem, even with the new innovations. And the approach that we are bringing is, instead of saying, oh, we're going to completely overhaul the system, we are working within the existing stakeholders and admitting that this is fragmented. But instead of saying that we are doing this the best, we are optimizing across many different paths available. And most of the time, those paths look like different cryptocurrencies that we can move from A to B, right? Or different exchanges that we can use.
When I was in the space, I remember thinking when TransferWise, which is now like Wise, came along, finally, right? One central place, they gave great rates and the timing isn't bad, right? And the model is that they are another middleman, so it's like the N+1 problem, but they usually keep cash, domiciled in the place where it is. And so they're not sending your money from one place to another. They're moving money from one local account to another local account. And that's brilliant. How do stablecoins make this better? Because it's not just let's slap crypto on it, right? Like, how does stablecoins make that world better?
Yeah, so a couple shortcomings of that. First of all, I agree. That's usually called netting. You have money in one place, you have money in other place, and you can just net the flow instead of physically moving money. The obvious drawback of that design is you're limited by liquidity. You can only have so much money in one place. At the end of the day, the money still has to move from one country to another. So stablecoins are a step forward, but they still run into liquidity issues, right? Stablecoins themselves is a fragmented market, and it's arguably becoming more fragmented every day. So banks are now issuing their own stable tokens, which on the surface are different, but when you look underneath, they're all the same thing. So our approach is saying that whatever cryptocurrencies are available within a corridor, regardless of whether or not they're stable tokens or Bitcoin or Ethereum or XRP or whatever else is popular, we can move money through those. We are simply using them as a vehicle to move value from one country to another. So what it may look like in practice is if a client wants to move $1 million from the US to the Philippines, we have a system that automatically breaks that $1 million down into smaller settlements and then identify the optimal cryptocurrency to make each settlement through. So that can look like we move $200,000 through USDC, a couple $100,000 through USDT. Maybe we use Bitcoin for a part of it. We use Ethereum, and that each route can go through a different exchange and can be triggered at a different point to the result being the most optimized FX rate that we can gather that is better than using any stable token by itself or any other traditional method by itself.
What was the thing for you? What was the personal itch that you were scratching by getting involved? Or was that just it's like a good salesman? Like a lot of people we speak to come from enterprise, right? And they're like, okay, I'm used to working in a regulated environment. There is a problem I want to solve. I can't do it within the strictures of a large company. I will go off my own and do it. What was your path and how did you get here?
Yeah, so Adam is a good salesman, but that aside, I was maybe fortunate or unfortunate, depends on how you look at it, have only worked at startups or small companies. I've never had an enterprise experience. And looking back, I've always also been definitely fortunate to work at companies with a real mission for positive human impact. Previously, most of my background is actually in medical tech, like surgical devices, medical devices, making them more accessible, cheaper, not necessarily making the most cutting edge robot that is going to sell for millions of dollars and cost the patients hundreds of thousands of dollars for each surgery, but taking an existing robot, how can we make that cheaper to have more people benefit from it? So when I met Adam, as he said, we were both doing our graduate degrees. I was looking for a next problem to solve. I knew that I wasn't going to do business for the sake of business. Like, I don't get a kick out of having a business and creating stakeholder value as long as if it doesn't solve a real problem. Obviously, that's part of it. But so Adam and I were talking, just met as friends, started exchanging ideas, and this is what we ran into. The irony here is he was looking for someone who had a background in fintech to help him build this thing, and with presumably some software experience. I had little of both of those things. I was not the fintech expert or a software expert, but we both shared the same passion for real human impact and access to opportunity. So we started working on it.
In fairness, while that's been a challenge sometimes, the simple reality that you've got very different backgrounds from one another, but also from others in the industry. Probably one of the things that helped us kind of back our way into the solution that we ended up with, because neither of us had particular interest or specialization in cryptocurrency or blockchain or just cross-border settlement. But we looked at what was out there and we just asked simple questions like, hey, Ripple's got a great, blockchain-based solution, but why just use one network? Let's stack up every network on top of one another. Let's use every token on every network and then optimize across them, because invariably it's going to give a different result, and the result's always going to change, and we proved that out. But that's kind of one of our strengths, despite some of the challenges at first.
So, as you know, Citigroup runs global payment systems, quite like a lot of the tier one banks as well. So my question is did you have a look at the systems that are there available? As a business, you can use those systems, right? And Citi will take care of all of the admin and the overhead and all of that kind of stuff, and you pay for the service that you get for transferring millions of pounds. Obviously that's for designed for American companies, but Barclays do the same thing and HSBC do the same thing for UK and so on. So when you're doing cross-border payments, you have a lot of choices and providers. So what drove you to build your own system when there are existing systems, and what were the challenges that you saw that meant that you wanted to build your own?
Interestingly enough, it's precisely what you just described that drove us to build what we built. There are so many systems, like we're recognizing that the blockchain is a great mechanism for moving funds, but which blockchain? And then what is the bridge token that you're utilizing if you're moving the fiat to fiat, from fiat to fiat, which is still an essential requirement. In reality, it's hard to tell. Even today, like if you ask me, hey, I want to move money from US to Mexico right now, USD to PHP, should I use USDC or USDT or something else? I can't tell you honestly what the answer to that is. A company built a technology that can tell you the answer to that question. But it's a simple reality that there are so many options. So instead of just building another option that maybe is a little bit faster, or allows for a little bit more volume at a slightly worse rate or something like that, let's just optimize across all of them, put that intelligence layer in place so that people don't have to worry about that. So that's really what got us to this solution.
And one of the key bits is it's not use this because it's crypto or use this because it's not Citigroup, big bank. It's in some cases beating the mid price for a screen FX quote, right?
Yeah, we always talk about value delivery, and so that's typically represented in fiat in the destination country, whether it's Mexican pesos or Brazilian real or what have you. So when we say we performed well, we compare ourselves against the market rate. Like, where are we relative to that? Just as a decent benchmark, and we can basket a couple of sources for that rate. But we always look at fiat to fiat. Anybody can buy USDC, send it to Brazil and say transfer complete. But we have to think about, all right, well then what is that individual or company going to do with the USDC? Do they need real? Do they actually want USDC? If they need real, are they going to offer it? At what rate? At what time of day? So these are the things that we can address.
And I guess just to add one more thing to that, Jay, to your question, we are ourselves customers of big banks, both individually and as a business. And since we opened our US to Singapore corridor, which I believe was a few years ago, so we have an office in Singapore and some team members. We have been using one of the major US banks to send money, run payroll. Since we opened our own corridor, meaning we can now serve clients between US and Singapore, the first thing we did was, okay, let's put our money where our mouth is. Like, let's actually use our own technology for our own payroll as a little case study. And since then, we've been consistently saving 2.5% every month for payroll compared to using one of the major US banks.
Our next best alternative FX rate.
Yeah, exactly. For us, it's a small company, small office, but this can really scale. That's the thing, right?
Knowing the Citi scale, if they were able to squeeze 2.5% off their global payments, we're talking about some serious money there. So yeah, it's interesting that you're doing the crypto back to fiat conversion as well. I'm not from the finance side, I'm just from the tech side, but my understanding, because obviously I'm interested in blockchain technology, so when I got into Citigroup, I started exploring what are they doing in that space for Payment Express and so on. And they were concerned about the efficiencies and the liquidity of being able to do that conversion. But I guess, yeah, if money talks, and if you're able to prove consistent sort of returns compared to what's available through the fiat to fiat transactions, that's probably quite an interesting space. I'm sure you're on the radar, or will be on the radar of some of the big banks.
Yeah, we talk to a bunch regularly. It's a timing issue, I guess.
I guess that's the lead up to another question, which is like the markets that you operate in and what kind of clients you target. Like, are you your retail operation at the moment, or do you white label your products and sell it into banks? Like, how does that work?
Yes, we're a B2B tech provider. We originally went down the route of like, we're going to be direct to consumer and we're, consumer facing platform, and, we're going to get the licensing and we're going to do all these other things that everybody else has already done. And then realize like the residual bandwidth and resourcing would be enough to do nothing innovative. So we went the tech route, doubled down on that, committed to creating something truly innovative, and added like a material value contribution. And the idea being that we would give it then to companies like Citi and other service providers who already have like the client relationships and the trust established, and then simply improve the services that they're currently providing. So we are B2B, we are a technology provider, and it layers directly into the existing like infrastructure stack that these institutions or corporations are doing treasury already have in place.
Yeah, it is an interesting point that Joe raises. It's like, well, if you're Citibank and you can buy from you, hopefully they do, and everybody wins. Percentage point differences in FX rates are huge. The market, like if you read a finance textbook, it's like bid offer spreads in FX are tiny. It's all arbitraged away with algo trading in milliseconds. For the audience who aren't familiar with this, what is it that's driving that? Is it sort of going back 200 years, putting gold in the stagecoach and driving it across the United States? What causes the friction that you found a way to get around?
Yeah, so basically the question is how are we getting such good prices? It comes down to a couple of things. The first and foremost is the difference in premium for crypto prices around the world that exists both in stable tokens as well as non-stable cryptocurrencies at different exchanges at different countries. We can see that we can buy cryptocurrencies at a lower price in the US or bigger economies and then sell at a higher price in developing economies. But it's not as simple as that, because those premiums are not always consistent or predictable. So what we do is we track these prices across all multiple exchanges in real time and simulate them, and also look into things like volatility, available liquidity, to see what is the risk we are undertaking and how much money we can put through the rails before we are hit with slippages. So by doing all that optimization, we can identify what is the best combination of cryptocurrencies to move between two given fiat currencies in the right ratio. So we can optimize for the premiums, reduce our risk or keep the risk within a tolerance, while making the most out of the available liquidities for each cryptocurrency. Any solution that relies on a single stable coin by definition wouldn't be as efficient compared to a solution that looks at all different options.
Kind of like computer science cost minimization textbook question, right? Like, how many hops is too many hops? You have to take into account the cost of doing the trades, which multiplies as you do more hops, but you have to like minimize the cost and presumably have to do it in real time. If we could, I'd love to go into a little bit about like how your technology works. Like, how many currencies are you dealing with? How many pairs are you dealing with? Do you have like a live graph of hops across different cryptos that's constantly updating, or do you do the analysis at request time?
Like when it comes to FX trading, for example, like everybody's fighting for the basis point and those premiums just disappear instantaneously. Think about it like a traditional currency pair, just it's Japanese yen and US dollars, and that's it. You're looking for that one arbitrage, that one premium. In between those two currencies, we've got anywhere from 10 to 100 different tokens that we're utilizing on a given blockchain, and then maybe we have multiple blockchains. And so we're looking at whatever's going to give us the best rate in that moment. Basically, all of them are kind of just like ebbing and flowing up and down. Some will kind of like be fairly stable and won't go up much, but won't go down much. Others are highly volatile. What we're doing is in a moment in time, we're picking whichever one gives us the high. So we're constantly riding the tops of these waves. So a different way to think of this is like, you're driving across the city and you're like, all right, I got to get across the city the fastest way possible. Inclination may be to take the highway, just straight across town. But what that's not doing is taking into account the time of day, congestion with traffic, maybe road closures, and a number of other variables. What you would do actually today is use Google Maps, which will find the fastest driving route based on real-time traffic, those road conditions, maybe tolls or other variables. So Almond's AI engine optimizing for the best path and the best timing, as well as the combination of routes you can utilize, is basically finding that best FX path in real time. So kind of the Google Maps of money movement.
I mean, it really is a classic computer science problem. It's taking me way back.
Now you're going to get me excited, but like, yeah, this is a max flow problem ultimately. So you're going to send a bunch of money from country A to country B, and you've got X number of routes to take. Like, are you going to jam it all through one route, like one pipe, or another? Ultimately, you want to potentially leverage all of them. So when you're moving the population across the city, it's a different problem set. So how do you solve a max flow problem for traffic? Same thing for money movement. So we can actually, if you've got a large settlement from city going from Singapore to Philippines, we may be splitting it up across multiple paths simultaneously. $1 million through Bitcoin, $1 million through USDT, 50,000 through Solana. We have that versatility. That's what really gives us that advantage.
And your selling point is fastest execution, but also right. That's right. Fast execution is challenging because you don't get to hold the money for very long. So do you make a spread? How do you make your money?
It's a dynamic pricing margin on the FX rate based on our performance.
And Sam, just to put some numbers on the previous question, we work in a dozen countries at the moment. So just going off the same analogy, there are a dozen destinations and starting points. We have over 100 tokens that we can pick from. Those are the modes of transport, let's say. And then in real time, we are looking at about 80,000 routing options. Like, how can a given settlement be broken down into smaller pieces? And when you add up all the probabilities, we have about 80,000 potential routes that are Google Maps is basically optimizing across.
So I have to ask about crypto. There's a tendency to flip-flop in the news between crypto being the savior to everyone's problems and all of everyone's problems. Bitcoin and the crypto market in general has lost a lot of value over the last few months. So how do you communicate this to different types of clients? Some people love all the details, and you talk to them about USDC and Solana, and they understand what you're talking about. And other clients is just seeing warning lights flashing in the background. Why do I want my nice stable payroll going through this crypto thing that my grandma definitely shouldn't invest in or whatever? How do you manage that and have a consistent marketing message?
Yeah, consistency is hard, that's for sure, because we get broad spectrum of clients with respect to their level of comfort with crypto and technology in general, I suppose. On one end of the spectrum, they are very tech savvy, and those clients are already, probably trading a bit of crypto. They have accounts at exchanges or developing some solution themselves. So when we talk about what we just spoke about with the different routes and the computer science problem, they love it. They cannot get enough of it, and they want to keep learning more, so much so that we want to make sure we, obviously not give away the whole secret sauce. The other end of the spectrum are clients that are super averse to anything crypto. They cannot stand the C word, we call it. So for those, obviously, we are transparent as to how the system works, but our messaging has to be different, right? We just say, well, you send fiat, you receive fiat. Anything in between, all the complexity that we would love to, get into, if you want to hear, is basically we're black boxing that. Like, we take care of the complexity. You don't need to know what crypto is being used to transfer, because at the end of the day, we are guaranteeing you the rate. We are guaranteeing you the amount of pesos or Singapore dollars you would receive on the other end. How the money gets there is basically our secret sauce. If you want to know more about it, we're happy to explain, but you get a good rate and near instant settlement, which should solve the business problem. But to your point, John, like, the consistency in marketing has been an ongoing challenge, to be honest, because we cannot just talk to one set of clients and ignore the rest. So we need to, when we pitch and talk to clients, we need to understand who we are talking to and then adjust our pitch accordingly.
For fintech startup folks, everyone's always told you've got to have your ideal customer profile, and you're supposed to write down like what are the problems they have and what can you say to them that makes them believe in your product. You have two very similar and very different at the same time ICPs, right?
Yeah.
I'm a completely unique customer. I'm the only person in the world that wants to buy a Ghana CD FX option. Like, there is no one in my market at all. I will pay whatever anyone's selling, because at the moment I pay payroll at spot. And it could be anywhere from, I mean, you talked about your own payroll, right? It could be anywhere from 14.5 to 16.5 any day of the week. And sometimes no one will offer you a price at all. But the Bank of Ghana will swear up and down that the price is 14.6. So with your product offering increasing liquidity and better services for clients, is there, and I'm kind of hoping beyond hope, a chance for more complex financial products on top of the simple FX cash?
The short answer to that is yes. The slightly longer answer to that is basically any product that benefits from a marginal gain on FX, like basis points hit the bottom line, stand to benefit from this. Anything that requires a solution that's effectively future-proofed, it's going to benefit from what we built. By future-proofed, I mean, the irony here is, while it seems maybe more risky because we're working with cryptocurrency, digital assets, literally every exchange open, blockchain built, token minted creates more optionality and that we can optimize across so no single points of failure. USDC depegs from the US dollar or on USDT or Bitcoin or something else. So anything that demands future proofing, and then reliability, which kind of pertains to the same aspect here. Where we can take it from there, though, what allows us to actually achieve these like operational results is the analytics, like the predictive modeling, the data science behind all of it. Sure, on the engineering side, like we're deeply integrated with these exchanges, and we've built effectively a universal adapter that allows us to collect and action on data from exchanges in different countries instantaneously. But it's the modeling that allows us to say, wait a second, wait a minute, or need to move this amount. Okay, move the first amount through this route because it's going to change the environment, market dynamics, such that the next 9 settlements over on these routes will be more optimal. Where else can that be beneficial? Anywhere in between trying to forecast where markets are moving, even through traditional markets, and evaluating where they are currently, or like where they are after the fact. We're the piece in the middle. We can detect like market movements where maybe traditional FX is breaking down, and so money's starting to flow through crypto markets. So there's a lot that comes from the data, the analytics, and the resulting insights that we're just starting to scratch the surface on, and it can apply to a lot of other services, products, or like an investment thesis. Like potentially even on the buy side.
Yeah, once you start pulling the thread and you think systemically about foreign exchange, your business gets bigger and complex, right? Because you're going to build or you have. I had a question about, just to go back to John's question about crypto in regulated environments, right? I wonder what trends and signals you're getting from some of your larger clients. I feel like Jamie Dimon bought everyone in the industry about a decade when he called his daughter stupid, like an idiot, for trading crypto, but it feels like that's changing quite quickly. What are you hearing on the ground?
Yeah, so we've got the FCA in the UK rapidly trying to write some regulation. Dubai and the UAE have maybe got a bit of a head start. Is it becoming more institutional?
Yeah. I mean, at a high level, it's a controversial opinion, but any regulation is better than no regulation, that we found at least. Just going back to the previous question about like the types of clients we have and their level of comfort with crypto. One trend that we are seeing across the last few years is as the regulation is becoming more clear across different jurisdictions, that is driving a bit of trust with our clients, because now they know that their central banks are regulating crypto at least. They know Almond is not going to disappear tomorrow because we are banned in that country. They know the exchanges that we work with won't disappear, because that was one of the major obstacles in our early days. We would evaluate a new market. We would even actually go to the central bank directly in most cases and ask, like basically explain to them, this is what we're trying to do. Can we do it? And the answer would be something like, try it and we'll let you know. Like, go ahead and then let us know how it goes. And then we'll like either write the regulation around it, or we'll let you know if you can no longer operate, which didn't give us confidence, and neither it gave our clients confidence. But with all the different regulatory bodies in different regions passing regulation around crypto, even if they are not perfect, I think it's a step in the right direction.
It's a really interesting reflection on hopefully the past, because it's a signal that you had an idea and a business model that clearly works 6 years later. But at the time, the institutions in a capital I sense, like these central banks that should be understanding and they should get your product, and they're like, oh, have a go, see what happens. So that could be taken either way as a founder. You could run a mile from it, or you could see it as an opportunity. And I think in your case, is still an opportunity.
An opportunity and a bit of friction. I mean, it's presented a headwind for a while. I mean, a few years ago, we're still kind of educating around blockchain. Now, then people kind of get on board with that blockchain makes sense, even though, like, what if everything's blockchain? Where's the inherent value in the dollar bill anymore? I mean, there was a gold standard in the 70s, partial 30s was really when we lost it. So it's all distributed trust, right? But we still have to kind of like make the case in a digital realm. Then stable coins, like, all right, now we're generally on board with stable coins. Meanwhile, we're at the every coin ever. It's all like we leverage the collective capability of it. So we're still like kind of 2 steps ahead, but at least the industry is catching up. Fortunately, we've had time to build the most amazing thing ever. It just doesn't help so much when we're trying to get up to speed faster. The regulatory standpoint has always been something of a focal point for us. Anytime we go into a new country, ask first when we talk to regulators, like, this is what we do, recognizing the concerns, the risks, real or perceived, and this is how we address them. And we were able to modify what we built to ensure that we were fitting within that. Because like we always want to kind of like fit within the national payment strategy and general like objectives around financial, like equitable financial services. There generally matches that. It generally lines up. Even the Federal Reserve Board, we had this discussion a couple of years ago, and there are basically a couple key issues like right out of the gate where they're like, we're going to make sure you never come back here again by the time this meeting is done. Fortunately, we did address, like if we could address them, we did address them. The first one is around AML sanction screening, KYB or KYC processes, which sometimes don't apply in the crypto realm. But we only work with licensed, centralized exchanges that are properly regulated in each jurisdiction. And then we work with a client who is either moving their own money, and so the KYB process is directly with them, or if they're moving money on behalf of others, they're licensed as a money transmitter. And so they're qualified to move funds on their behalf of their ultimate beneficiaries. So that's an easy one. Then it's the risk of crypto, the volatility and all this other stuff. But the reality is, like, again, that we're moving through crypto very, very quickly. So we're going fiat to fiat, funds delivered in a local currency far faster than traditional models. So actually the risk is a lot lower than holding large capital flows in different currencies over a period of time. And then the final piece is, well, what if there's a system failure? Like, what if a blockchain breaks down or a token loses value? In a lot of like single token or single chain solutions, this is a reality. Well, we're agnostic, multi-token, multi-blockchain. So we have those redundancies built in. So like it was from there, like we really crystallized exactly like how to make this fit within the regulatory framework and by extension, like directly addressing the needs of people in a safe and secure manner. It doesn't change like the hesitation on behalf of companies not wanting to be the first ones to take the step on, something like this, but we're getting there.
They'll quite happily be the first ones to shave 2% off their payroll costs once they figure it out. That's great. So when you talk about scaling the business, practically what does that mean? You mentioned picking up new routes, new cryptocurrencies as they come online. If there's another crypto winter, maybe there aren't that many, but that's not going to constrain the growth of your business. At least that's what we took from our prep call. So what does the next 12 months look like for you guys?
Yeah, growing the number of routes or cryptocurrencies that we work across. Fortunately, that's been automated to a large extent as we partner with new exchanges, or if an existing exchange introduces new cryptocurrency routes, we automatically pick those up and build it into our solution. So that's one of our wins, I would call it, that it became sort of a self-improving model. Speaking of models, by the way, I just see Sana Kanwal is one of our engineers. So Adam and I are doing all the talking, but she's behind the scenes building a lot of the good stuff that's making this work. Going back to scaling, I look at it from a couple perspectives. One, obviously geographic expansion. We are an international money transfer company, so the more countries that we work across, the better. We are real diligent about our growth. We mentioned previously that we are primarily serving North America, South America, and Southeast Asia at the moment. So the geographic expansion looks like expanding to other regions that we don't have services yet, like the UK, EU, Middle East, North Africa, which are slated for this year. Additionally, another aspect of scaling is use cases and type of customers. This is a big business, right? Like most businesses in the world now have a need to move money either to pay their clients or collect money from their clients, pay their suppliers, supply chain, payroll. There are so many different use cases, and we have only scratched the surface. So expanding into other client types and use cases is another dimension of scaling for us. Adam, anything you would add?
Yeah, the geographic expansion is purely important to me because the second that we expand into a new country, our engine starts running. And as soon as it starts running, it's collecting truly unique data that nobody else has. We're basically looking at like every couple of minutes what it means to move money from fiat through every available bridge currency in the fiat. Huge data set for settlement. And then we're doing that every couple of minutes throughout the day, every day of the week, every week of the year. And then we're accumulating that over time. And this really drives the optimization forward. And this is also like this tremendous repository that can be layered into other data sets. So like this is more use cases. Where else do we take this? I start talking about buy side forecasting for markets and how money's moving for large investment banks or what have you. Layer this into some of the broader market dynamics and data sets. And I think we would see the value of it compound. So the sooner we do this, the better. Obviously, the balance here is early stage company scaling, expanding new geographies versus dedicating bandwidth to selling within our existing geographies and activating clients and moving volume. So this is a bit of a constant balancing act right now. But the ultimate, what does scale really look like when we get this technology into the hands of everybody, like the benefits of this technology? That's what success looks like. The reason we started this company is this should create a more affordable, equitable, accessible global financial ecosystem, like a systemic change. And the sooner we see that, the better. So let's work with the right strategic partners to help us accelerate this and get it out to the market. So companies as small as ours can save a couple percent on payroll. 85% of our burn is payroll, global payroll. That's massive. Small company. Of course, we're not going to get like the best top tier rates for our corporate volumes, but any company of any size can benefit from this, big, huge, or small. We've demonstrated that.
So scaling a business is risky business, right? And it requires a very different skill set to what it takes to start a business and to do early stage growth. And normally a business will have one or more factors that's kind of bounding its growth, like what's the actual growth constraint. And luckily for you folks, you've got one baked into your business. It's regulatory, right? It's like every time you go into a new environment, you have to deal with, or you get the opportunity to work with different regulators with different interests and different needs. How are you deciding, I guess, which environments to go into, and how do you balance the two factors that you spoke about? One is regulatory growth in different environments, and one is selling it into different sectors.
From the regulatory standpoint, the criteria that we have is it has to have a permissive, clear regulatory environment framework established. Exchanges need to be licensed by the regulatory bodies. This was not always the case. We would go into like gray spaces, and then in some instances, we would actually end up working with a regulator, like one of the central banks in APAC, like strictest of all of them. Why would they want to work with us? Because our philosophy, our values, like what we're trying to accomplish was totally aligned with their objectives and what they wanted to achieve for their country. And so we moved forward with them in like a testing sandbox environment. Why we don't do that as a standard procedure is because it's tremendously costly. There's no end in sight. We're talking a couple of years at best. There's lots of testing. Commercials can't even be part of the discussion. And for a bit, I'm like, well, we were at least informing the development of policy around this, advancing the industry. And I want to do more of that. At the same time, like that's the other balance is what can we afford to do right now? So we are prioritizing going to market where we can go to market fast and reliably with confidence from a regulatory standpoint. And then generally, if we are going to that kind of market, then the target market is more receptive of it already because they feel like they got the top cover, regardless of where they stand in that segmentation.
That's a challenge, but in some sense, a nice problem to have because no one else can go into those markets ahead of you really either. That's really fascinating. Well, I will thank you both before we come back for one final thing. Thank you for taking the time to talk us through Almond. And lastly, Yunus, Adam, is there anything our audience and our listeners can help you guys with? What would you like people to come and help you with right now?
If there's a use case you have for this, let us know. Like Yunus said, like we are constantly open to the very many use cases that we're not even fully aware of right now. And it is like legitimately interesting and it's fast for us to validate something. So whether it's for you, for, if you have ideas as to how we should segment this out or recommendations for points of contact, like we want to get this out there as quickly as possible. If you want to get involved with the company, obviously, fundraising never stops for us. So certainly open to discussions around that. And then we're particularly interested in like strategic partnerships, like how can we kind of co-build, how do we grow together and kind of conquer this problem with the right counterparts. So pretty broad. If you haven't noticed yet, we're pretty ecosystem wide when it comes to problem solving. So that's how we tend to solve hard problems.
Yeah, and specifically, so we are not operational in the UK and Europe at the moment, but it is our next frontier. So in the coming quarters, we will be operational across Europe and UK. So specifically looking for, like Adam said, partnerships in these geographies, both in terms of strategic partners or clients and use cases. We are building it as we speak, but once we go live, we want to go live with a good strategy and that we're already built.
That's awesome. I'll be keeping an eye open for sterling to euros. Great. Thank you very much, guys, and thanks to all of our participants who joined us today. Really appreciate you taking the time to come and listen to us. I'm John, and we've got Sam, Adam, and Yunus with us today. Thanks very much.
Thanks everyone. Thanks, Adam. Thanks, Yunus.
Thank you for listening. We'd like to thank our sponsors, RecWorks, Turntable, and Quantfin. Thank you to Barry Cranford for his work organising the show. And thank you to Alex Villela, our editor. Join us next time to hear from Zara Ransley and Matthew Harker, co-founders at My Pocket Skill, about the challenges young people have both entering the workforce and with money in general, and what they've built to help. This is Born to be Scaled.